You are listening to Policybazaar.ae's The Policy Project. We've got you covered.
Hello, ladies and gentlemen, and welcome to another episode of The Policy Project. I'm Sid, your host and your go-to guide for all things insurance. And I hope everyone is doing great today. Now, today, we're diving into the topic that is often confusing for a lot of us. Term insurance versus whole life insurance. Now, many of us understand the importance of life insurance, but don't quite understand the difference between, these two options. What is the fundamental difference? Now, to understand these differences is very, very crucial. And to choose the right plan, to help us break it down, we've got experts with us today. Please join me in welcoming Atul Kathuria. He is the business head of life insurance and investments at Policybazaar.ae. Pleasure having you on the podcast, Atul.
Thank you, Sid. Thank you for hosting us.
And also Geeta Mangnani. She's the Senior Accounts Manager, IFA Distribution, Zurich International Life Limited. How are you doing?
Good, Sid. How are you?
All is well. Welcome to the Policy Project. We're thrilled to have you, and let's dive right in. Good to go?
Yes, please.
All right. So, Atul, let's start with you. Like always, let's start with the basics.
Yes.
What are the key differences between term insurance and whole life insurance in terms of coverage?
Right. So, in terms of coverage, both plans have a life insurance component wherein if the policy holder were to pass away, their nominee will get a sum assured, which is defined at the start of the purchase of the policy. The term insurance policy usually covers people up to 75 or 80 years of age.
Okay.
However, the whole of life policy would usually cover people from 95 even till 99 years of age. In the whole of life policy, the years of coverage are defined. Like if the policy is for 95 years or 99 years, there are usually the only two options. Otherwise, for term life insurance, people can choose for how many years they want the coverage.
Okay.
Most of the people choose to be covered till the age of 60 to 70. So depending on if I'm 40 right now, I'll take a policy cover from 35 to 30 years.
Right.
So my policy cover will end at 65 or 70 years of age. However, for whole of life, if I've taken a plan, that will continue till 95 years of age, or for some plans also till 99 years of age.
Okay. But is there any maximum or minimum age for entry, so to speak, into these plans?
Yes. So for the minimum age of entry is 18 years.
Okay.
And the maximum age of entry given by some insurance plans is 75 years.
Interesting. Okay. Now, Geeta, let's come to you. One of the major factors people consider is obviously affordability. So how do the premium costs of term insurance compare to those of whole life insurance?
Affordability is something we think in everything, and why not insurance? With the term plan, it's very simple. It's a very simple product. You pay for a particular term you're choosing depending on your requirements, and you get covered for those many years. On whole of life, like Atul said, it covers you 99, 95 in some plans and beyond as well. So if I can give you an example, I'm a coffee lover. So earlier you used to get very simple coffee. Ask for coffee, you get coffee, right? Now there are around 6 options of milk: almond milk, soy milk. Then you have different flavors like caramel and all that. You have different names of the coffees. Like I never knew there was something called flat white as a coffee, right? And then whether you want it in an insulated cup or not for it to last hot longer. So the more the options, the more you pay. The less the options, or a simple coffee, you pay less. So that's why the term plan is more affordable compared to whole of life, because whole of life has more options and more flexibility.
Now, there is also something called the cash value component. So can you explain what cash value component of whole life insurance policy and what it is and how does it work?
Sure. Again, a very good question. Cash value component is there only on whole of life policies. It's not there on term plans. And basically, the life cover which the client opts for, or death benefit, whatever you want to call it, it's a risk for the insurance company. And the cash value component, which gets built up after the premium the client pays and it gets invested in that, it creates a fund value. Now, the difference between the life amount and the fund value that builds up over the period of time on the policy is the sum at risk. And that's where the cost gets charged on sum at risk. So the higher the fund value, the lower the sum at risk. And I'll give you an example. If my life cover is $1 million and my fund value after 5, 10 years in the policy is $100,000, the new sum at risk for the insurance company is $900,000, and the cost of insurance will be on $900,000. Though the family will get $1 million at the time of death, and that's why whole of life policies, going in back into our earlier question, are slightly more, uh, I won't say expensive, but a slightly more higher in premiums because they have the cash value in it as well, which the term plan doesn't.
Nice. Good to know. Okay, now this next question is for the both of you. What are the typical target demographics for term insurance versus a whole life insurance? And how do we determine which plan is more suitable for us?
So, very proudly to say that we subcontinent people believe in giving back something or leaving back for our family. So, of course, most of our target audience is people from India, Pakistan, Sri Lanka, Bangladesh, and subcontinent. And I wouldn't say there's a particular target audience when it comes to term plan or whole of life. So I have a theory, or rather, one of my colleagues recently shared it. Also, Ganesh shared it, and PDY. So primary dependency years or the peak dependency years. Most of our life, from the age of 35 to 55, is when we have our maximum financial commitments: mortgage, education, trying to save for retirement. And after that, the commitments kind of slow it down. So if the client uses this thing where he takes a term plan for the primary dependency years, or PDY, and a whole of life plan as well with a slightly smaller coverage, he will finish the payment for the term plan when his dependency is over, but continue with his whole of life plan so that in the last years, or in his retirement years, he still is covered. So a combination of both would be perfect, and suitable for the clients as well. I think Atul will agree with me unless he has a different view.
So I think I mostly agree with what Geeta just mentioned, that ideally one should take a combination of both till your dependents have a lot of you have a lot of commitments in terms of your children's education or your mortgage of your house and so on. So till that time you should have a basic term insurance cover which has to be as high to cover all these needs. And post that, if you have a whole of life plan continuing, what will happen is that if at all you have some, like let's say it's your grandson's graduation and you want to throw a party, where will you get the fund from, right? So that time this fund will come in handy. And also, if at all you pass away, then the sum assured that your nominee gets, that can be sort of your legacy that they can consume and go on with. And apart from that, only cases where it's as of now your pocket is not allowing you, and you have you are short on funds. In only that scenario,
Huh.
you should go with a pure play term plan because it's much cheaper and it still covers your dependencies.
Interesting.
Yeah.
Very, very interesting points. Okay, so Atul, now let's talk about the death benefits. So, one of the major concerns for the policyholders is how the death benefits are paid out. So, how
Right.
does this differ between the two, term insurance as well as whole life insurance?
Right. So I believe there's no difference in terms of how the claims are paid out. So if the
Okay.
policyholder passes away, their nominee
Hmm.
shares intimates the claim to the insurance company, and they can also do it via Policybazaar. So they intimate the claim,
Okay.
and whatever documentation is required, it could be death certificate, some medical support documents, and
Huh.
so on.
Right.
And if at all there is some follow up from the insurance company, but if all the documents and everything is in order, the claims in both the plans, in term plan as well as whole of life, the entire sum assured is
Yeah.
paid out pretty soon.
Very cool. Okay. Now, last question, Geeta. I think you can jump in on this. What happens if someone decides to surrender their whole life insurance policy? Does it impact the benefits? And is there any payout involved there?
Yeah. So actually, Sid, it ties in very well with the cash value question you asked me. There is a cash value. After a
Yeah.
certain period of time, the funds perform and they
Right.
give a fund value. And yes, the client can take a surrender.
Right.
Either it can be a partial surrender where he just takes a portion of it, or it can be a full surrender where he plans to
Mm-hmm.
close the plan. But I would never advise that. Uh, if he takes a partial
Okay.
surrender, and I'll give you an example again, the $1 million life cover, and if it's $100,000 of
Yes.
fund value that he's available, and he takes that as a surrender, the new life
Hmm.
cover will then be nine hundred thousand
Hmm.
dollars. So it'll reduce from his life cover.
Correct.
Uh, so that's what the cash value does, and of course, circumstances change. You never know when you need a fund, and that's where whole of life plans can help you even for such unseen or for unforeseen instances.
All right. Very interesting, very insightful. Thank you so much. And we really had fun in this one. Now, let's move on to our next segment. It's called Ask Away. So, here we take up FAQs by our customers and we respond to them with the help of our experts. Now, if you too have some questions about finance and insurance and you also want to find out more about these, don't hesitate. Just ask away. Slide into our DMs on Instagram, follow us at Policybazaar.ae, or you can reach out to us via our social media channels as well. We'll try our best to answer your questions in the next episode. Today, however, we have some interesting questions about term insurance versus whole life insurance. So, Atul and Geeta, ready?
Yes, please.
Yes.
Okay. So, Fatima wants to know, and Geeta, I would request you first to jump in on this. What happens if I stop paying premiums for a whole life insurance policy? Does it lapse like the term insurance, or are there other options as well?
A good question, Fatima, over there. But remember the cash value. So cash value is always, if it is there on the plan, the policy will not lapse. It will continue to exist, and God forbid, if there is a calamity, then the company does pay out the claim, either live-in or death. However, if there's no cash value, then the policy does lapse, but you can always reinstate the plan as well.
Okay. Fatima, we hope you got the answer. Next one. It's from Hamza, and he wants to know, okay, can we take a loan or borrow against a term insurance? Geeta, would you want to take that?
Yeah, sure. So we can't take a loan against it, but we can definitely keep it as a collateral, and that's why
Mm-hmm.
term assurance is very, very famous for mortgage collaterals. All banks take it as a collateral, so you can't take a loan against it, but definitely as a collateral for any financial credit facilities, mortgages, or loans. The banks will
Okay.
anyway ask for their security.
Very interesting question, by the way. Okay. Arjun got next question here. And Atul, can you help us with this one?
Sure.
Do we have the options of adding riders to whole life policy? That's what his question is. And if so, then could you tell us some common ones that are a must have?
Yes, for sure. You can have riders with your whole of life policy. Some of the most important ones are critical illness, permanent total disability, and waiver of premium. Which
Right.
rider you should pick and how much of a sum assured you should take depends on your needs and also how much premium it is adding on to your base plan. And for more details, obviously, you can reach out to our advisors and they will be able to guide you best.
Yeah. Policybazaar.ae, Arjun. Remember that. Policybazaar.ae. All right. The last question is coming in from Ubaid. Now, he's asking, what are the key considerations when choosing either term insurance or whole life insurance based on personal financial goals? Atul?
Right. So I'll just summarize this, which we've discussed earlier, that if you are looking for simply a safety net for your family to fall back on if you were not there, let's say at the age of 40 or 45, when your family still has dependence on you, if you were not around, what funds or what money would they have? If just for a safety net you need a option, then term insurance is the way to go. But if you're looking for a plan which provides you this safety net as well as a very flexible and amazing investment option, whole of life plan is the way to go. And in some cases, if you can make a combination of both, buy one of each and split your premiums accordingly, that will be even better.
Brilliant. Thank you so much. All right, Ji. So this brings us to the end of this segment, but don't go just yet. If you've got more questions, then simply ask away. DM us on Instagram, follow Policybazaar.ae, or reach out to us via any of the other social media channels, and we'll try our best to answer all your queries in the next episode. For now, though, I hope we're all more informed about the key differences between term and whole life insurance. We'll be back in the next episode with more insightful discussions, and we'll have our experts along with us. For now, though, Atul and Geeta, thank you so much. It was a pleasure having you in on the conversation.
Thank you for having us. Thank you.
Thank you so much.
Well, that's it for now. Take care, and we'll see you in the next one.
You were listening to Policybazaar.ae's The Policy Project. We've got you covered.